Welcome to Deal Closers with Anette, Talie, where we focus on the deals. Our guests are real estate closers who will share in detail the whole process from finding a deal to closing it, as well as strategies and tips to help you do the same. Here is your host, Anette, Talie.
Welcome to another episode of Deal Closers. I am your host, Anette, Talie, and my guest today is the wonderful Pili Yarusi.
Welcome. Hi, everyone.
So let me read a little bit about Pili. Pili is a wonderful woman, amazing wife, loving mommy, and an awesome human. She has partnered with her equally awesome husband, Jason, and created Yarusi Holdings, LLC, a large multifamily investment firm. Currently, they are general partners in about 800 units with 250 under direct asset management. Her focus is on large multifamily syndication and asset management. She has a goal of $450 million in asset under management. Pili's high action steps are providing her investors with capital preservation by looking for B and C class assets in 20 to 50 million range. Her markets include Kentucky, Georgia, and Florida. Welcome, Pili. Tell us a little bit about yourself and how did you get into real estate?
Thank you so much for having me. I'm so honored to be on. So how did I get into real estate? So back in 2013, 2014, Jason, I just kind of made the switch. We were living in New York. We were running restaurants and we decided to have our first child. So in 2014, we moved to New Jersey and there was no way I was going to run a bar. There was no way I was going to work at a restaurant. And Jason's family has been in construction for 40, 50, sometimes 60 years, depending on when you talk to my father-in-law. And they do this. It's really interesting what my family does. They actually raise homes. They take flood ravaged homes for the most part. Sometimes it's just people just need to fix their foundations, but for the most part, it's flood ravaged homes, and they lift it and they fix the foundations, and it's a niche market that they're in. So for a while, they had been thinking about getting into investment real estate. So lo and behold, Jason and I moved to New Jersey. I get my real estate license while I'm pregnant. We start our entire journey. We're flipping, we're wholesaling, we're up leveling. One day I go to a RIA meeting and I meet this gentleman that's doing turnkey. And he's like, this is what I do. These are some of the properties that I have. I was like, I'm not really interested in turnkey. But if you have some duplexes or some like multifamilies, I'll look at that. Took a look at a couple of multifamilies, and these were in Indiana, and I had no idea what Indiana was about. We did some market research. We looked into it. We looked into these properties, and lo and behold, the numbers were outstanding. So we bought 2 of those. But the thing is, what we did with this turnkey provider is we told them, put your fee on top. We're going to treat you like a wholesaler, and then you're going to take care of the construction. You're going to take care of managing the asset. You're going to take care of property management. But I want to pay for the property in advance. So we got sort of a discount on the property. A year later, so during that year, we were doing really well. It was two duplexes though. So, if one of the duplexes was empty, we'd basically be 25%, out of pocket. So during this time, and I'm not usually the person that brings on the big ideas. It's usually Jason who brings on the big ideas. So of course, Jason takes this amazing idea that I have, investing out of New Jersey because the price points are so much lower. And he goes, well, if we can do it with 2 duplexes, can't we do it with 10 units, 50 units, 100 units, 500 units? And my mind's exploding. I think we're pregnant with our second child at the time. So like I had to have this like mind shift. And I think we'll get into that later. So out of that mind shift came large multifamily. And that's basically how we got into real estate. And now we are focused only on large multifamily. We have one more flip that we're selling. It's actually under contract. And then we are totally in large multifamily.
That is awesome.
The Deal.
So what deal are we talking about today?
So we are actually going to talk about our first large multifamily deal. It was a 94 unit in Kentucky, Louisville, Kentucky. And the reason why this deal is so great to talk about is that we actually proved the concept. We purchased the property in early 2017, and we actually just sold it. And we made a pretty profit for ourselves, our investors, and everybody involved. And it was a great property. And it just goes to show why this asset class is so amazing.
All right. So how did you find this one?
So this one, well, to take a few steps back, in order to get into large multifamily, it's hugely different than flipping and wholesaling. You need more education. So we found a mentor. We got into the mindset of it, like I was saying before, and we started digging into markets. So you really, really, really need to start understanding the terms and the ratios of large multifamily, because it's hugely different from flipping and wholesaling, like I said before. And then you really, really have to dig deep into the market. So while we were flipping and wholesaling, we were basically in our backyard. So we knew the market. It was really easy. Whereas to invest out of state, first you have to pick a market, and then you have to look for things like job growth and diversity, population growth, supply shortage, path of progress, new construction cap. I mean, there's so many things that you need to look for when you're finding a market. And the number one thing we actually looked for, Kentucky, my sister-in-law lives there. So we had boots on the ground, even though your boots on the ground might not have previous knowledge of real estate, they can tell you what the markets and submarkets are like. And then we really, really dug deep and started to evaluate the property, started to really know our numbers and underwriting. And our mentor really, really helped with that. I mean, I'm going to give a little bit of kudos to Joe Fairless. He's the one that really kind of up-leveled what we were able to do, because yes, without a mentor, maybe we could have done it by reading books, figuring things out, talking to brokers, but having a mentor, you don't know what you don't know. So you have to figure out those questions to ask, and then creating your brand and really, really getting yourself out there. So to how we found this property. So this was a property that we found in Kentucky, and it was actually, this was the one that was brought to us by a broker, and we put out an offer at 2.1 million. They wanted 3.2.
Wow, that's a big
So,
difference.
and then they counted back at 3.2, and so we moved on. But the thing is, and this is a huge key for your listeners, is you need to follow up. Get a little investor spreadsheet if you don't have it, and keep these properties on there. Make sure you have follow up and follow up and follow up, and keep on following up, because we came back to them. Like I was saying, we followed up with this one 8 months later, and we offered $50,000 more than our original offer. And they came back at 2.3. So basically we got them down from 3.2 to 2.3 million down purchase price. And that was basically 24.5 per door. You can't get that anymore in Kentucky. I think it's double that now. And at the time, the appraised value was 2.6. So yeah, that's how we got into it. That was the purchase price.
Wow. So was this your first syndication?
Yes, this is our first syndication. This is a first large multifamily deal. It was, I'm not gonna lie to you, it was a little nerve wracking, and most of the footwork and everything was done by Jason and I and our partner Kevin, and really getting into just really the mindset. Because at the time I was still oh, I don't know if I want to do this. I think I'm going to concentrate. We're still flipping and wholesaling, and we're still doing everything and getting into this. So for your flippers and wholesalers out there that are afraid that they're too busy, you're not. If you really want to get into it, then just dive in.
You gotta focus on that.
Yeah.
All right. So it was on the market, or was it like an off-market deal?
No, it was on the market.
It was on the market, and then you just kept following on it, and then 8 months after, you offer again, and then you got it for a really amazing discounted price.
Yes.
That is amazing.
It helps. I mean, it helps to follow up, and you create camaraderie with the other broker, with your broker. They know that you were there, that you're willing to work with them. You show them your numbers. That's key. Be like, okay, it's great that you want 2.3 or 3.2, but the numbers don't work. This is my numbers. This is what works for me. This is how I can make it work and make it work for my investors. And we can close, and we can close quick. And this is our timeline. This is our business plan. This is what we want to do. Let us know what you're thinking. And we go from there.
Absolutely. All right. So then you are already under contract. So what were the points that you negotiated? What type of things were you pointing out that that helped you negotiate that?
That helped us negotiate it?
Down.
Well, a lot of it was that they were tired owners. They wanted out. Their leasing, their operations were really, really bad. I mean, there were so many things that we had to go in and fix. And there were so many things that we just were able to negotiate on and bring them back down. And plus, they just really wanted to sell. So, and we were the only ones who were following up.
Right. And after 8 months, they were ready to do it. Right. They were waiting, and then at 8 months you follow up, and then they are ready to do it now.
Yes.
Awesome. So how did you fund this deal?
So we ended up syndicating it. And the thing is about syndication is we brought together a bunch of other investors to fund this deal. And so this was our first one, and we weren't sure what we were doing, and asking people for money, and that's the mindset I had at the time, for me was really, really, really difficult because I hadn't changed the mindset. So when you're syndicating a deal, don't think about it as asking people for money. You're providing them an opportunity. I was providing them an opportunity that in the end, when we exited out of this property, provided them with over 30% IRR and over 30% ROI on their investment. So when you're thinking about it and going out there and putting your deals out there and your syndications out there, don't think about the money. Think about how you can help your fellow investors, your family members. I mean, we raised most of the funds from people that we knew for this first deal. For our next and our following deals, we actually put our hand out a little further. But for this, see how you can help the people around you.
All right. Awesome. That is awesome. All right. So tell me about the exit. I know you said that you already sold this property. So tell me, what did you do once you took over, and how did this property work?
So we did so much right to this property. We transitioned new management onto the property. We did like a better screening and collections process. We completed all of our 6 and 12 months repairs in less than 5 months. And we created a tenant referral program that allowed new great tenants to refer their friends, and then they would to live there. And then we implemented a move-in fee instead of a deposit that goes directly to our bottom line. So this was a great property to be in. We also installed a water savings plan that cut our water bill by almost 30%. And that was huge. That provided an increase in the building value of $325,000. So that was huge just by water savings.
So how does that work? How is a program, water preservation program work?
We did things like put in low flush toilets. We put in aerators into like the little spigots. It was just like the small things that you can do to your apartments equal big savings.
Right. Yeah, that is amazing because a lot of these old toilets, they are leaking and you don't know, and that's a waste. And if
Yes.
you are paying for the utilities, that in 94 units, you have 94 instances where you're losing money.
Exactly. So we went into every unit and made sure that we could find as much cost savings as we could. And we also, and I have to tell you this story. So this was a BC-ish neighborhood, and the building that was across like the way from ours our tenants were complaining about the crime that was in that building. So we actually had the Louisville Metro Police use one of our units to do a stakeout so they could watch that building. And from what I heard, they actually caught the building, they caught the people that were causing the crime. And so we actually also made the crime rate of the area go down lower and made it a better place to live, because now our tenants knew that we were taking care of things and making the area safer.
Ah, that's amazing. That's awesome.
So we also put in a laundry contract on the building that put 2 laundry rooms in order for use. And this was actually a laundry facility that all other buildings would come and use because there was no other laundry in the area. And then, like I said, we just made the buildings a much safer place to live.
Right. So you said that you changed the management. So were the people before managing it themselves, or their management just wasn't managing properly this property?
They were managing it themselves.
Oh, they were. Okay.
Yeah.
So definitely there was a lot of room for improvement.
Yes.
That is amazing. So did you mention how much were you able to raise the rent per unit?
No, we raised the rent. I believe we did about $50 rent increase on each of the units for this one.
Right when you took over, or as you?
No.
Renewing?
And we don't do that to any of our buildings or any of our tenants. What we do is we go in and we make the place a better place to live. We show our tenant base that we are going to take care of them first. And then we put them on a series of, like, if somebody's lease is coming up, we give them choices. They can either re-rent the apartment as is for a nominal rent raise, or they can move into one of our renovated apartments, because we already know this tenant base, this tenant, let's call him Tenant Joe, is an awesome tenant. He pays on time. He might have a dog, so yay, pet fees. And we want to move him up so we can get into his unit that needs work, repair that, and then bring that up to market rent. So if he moves, we don't take him all the way up to market rent, but we get close, but just under, so he knows, oh, I'm still being taken care of. So no, we don't raise rents immediately, because we want to know, because they're going to know that we're new management, we've just taken over the building. We don't want to lose our tenant base by just like saying, oh, well, market rents say that you're supposed to be $50 higher, so I'm going to bump it up $50. No, you want to show that you're going to fix the building first.
Absolutely. That is a great way to get your tenants to be loyal to you, right? Like by offering them a little bit of a discount from the market rates that you're going to be getting on the new ones.
Exactly. And the thing is, I mean, as syndicators and large multifamily providers, I hear a lot of people talking about our duties to our investors, our fiduciary duty to the investors, how much money we're making the investors. But we have to keep in mind the tenants that we're taking over the building for. We are now we have a fiduciary duty. Now we have a duty towards them to provide them with an excellent living space. And just jacking up their rents just because we happen to be new owners that see the value in this building, that's just, I don't know, I think that's rude.
So how did you handle problem tenants, for example? So now you inherited 92 or 90 something people that that you started learning if they were good or bad, like if they were paying on time. And so how did you handle the ones that you didn't want to keep in the building?
Well, unfortunately, any problem tenants, you do have to go through the eviction process. I mean, you give them a chance, you give them a few chances, and once they're red lighted and they need to go, then they really need to go. The thing is, we have an excellent management company. I rarely hear the evictions. I see the numbers, but I know that if a tenant is being evicted, it's for a good reason. And we actually won't evict people for late payments. Some people just can't pay on time and they'd rather have a safe place to live and pay the extra money a month than not. So we don't evict people for that. It's more for like misconduct or, negative things like that. It's never for they can't pay. As long as they pay, we're good.
Right. So how did you find your management people, your management company?
Talk to as many people as possible. I mean, we looked at a few management companies when we got in, but you really want to have your team in place before you start putting in like offers. You want to know who you're going to be working with. You want to talk to brokers. You want to talk to property management companies. You want to interview people. You want to talk to other investors that are in the market. You just really want to just reach out to as many people as possible and create your team, because your property manager, they become you on the ground. So you want to make sure that you can work with them, that they'll listen to you and listen to your business plan and carry out your business plan, but also be smart enough to know when they have to pivot or take the problems as they come. And also they have to be good communicators, because if they're not good communicators, then you're going to have problems down the road.
Absolutely. And you have to be on the same page, right? Like your property manager has to be in the same page as you. Like you said, to carry out your business plan, because if you're disagreeing on, what do you want them to do, then they are just going to start doing whatever they are used to do and not carry your business plan.
Exactly.
Right.
So just talk to as many people as you can when you're looking for, any team member, really, when you're looking for brokers, when you're looking for lawyers, when you're looking for your team members, you keep on talking to people. And that's how you find the good ones.
Awesome. And from this was your first syndication. What was your biggest takeaway from the whole experience? Because you had to basically start from zero, because you were doing flipping, but that's a totally different beast than syndication. So this was kind of like your test drive for syndications. What was your biggest takeaway?
There were really so many. That's a great question. My biggest takeaway was really, for me, it was the mindset shift from working with one house, one seller, one roof to, basically one roof, but multiple tenants, multiple lives. And now I am not in charge of, but I have a say on how their lives are going to go now, because I am providing them with a space to live. Really opening myself to raising money. Again, I'm doing air quotes. I don't like that term, raising money. It's providing opportunity.
All right. So tell me, how much did you sell this property for now that you exited?
So we ended up selling the property for $3,978,000.
Wow, that is
above
amazing.
And beyond what we thought we were going to get it. And we actually, when we bought the property, we had a holding period of anywhere from 5 to 10 years. We underwrote into 10 years thinking that we were going to hold on to this property. But out of the blue, an investor called up our broker and said, I have an offer. We looked at it. We negotiated. We came to this price. And then we actually had a couple more offers come in. Which really, really, I guess, strengthened our holding. And we never put it on market. I think we had actually 5 offers total, but we ended up going with the first person because we believe that usually the first is the strongest, and he raised his offer and made it very, very lucrative. So our investors did really, really well on this one.
That is amazing. So you did it in under the time that you were thinking. You
Yes.
had a much better return, and
Yes.
you also sold it at the right time.
Yes.
That is amazing.
expert tips.
So now you're going to give me 3 tips about mindset. And we were talking a little bit about mindset before. So what are your 3 tips for people to really change their mindsets? Because I am in that place where I really want to do large multifamily, but I'm still thinking about the small buildings.
Well, the thing is, you have to think, number one, you have to think bigger. Because just think about when you first started, and this is for all your listeners. When you first started, you're like, oh my goodness, I want to buy this property. I have to either find the money myself, or I like, you don't know anything. So you go and you educate yourself. You go on Bigger Pockets, you read a book. It's the same thing when you take that step into buy and hold, into large multifamily. You keep on educating yourself. And as you educate yourself, your mindset gets stronger. But first, you have to dream bigger. So if you have the dream to get into larger markets, to get into larger buildings, because for instance, Jason and I, we want to have $450 million of assets under management. I'm not sure how many units that's going to turn into, but that is our goal. We don't have a time goal on that though, because we don't know what the market's going to do, but we know that that's our goal. That's what we want. So that allows us to think bigger. Put that bigger number into your head. So that's number one. Number two, and this is more for me, I had to get over myself. I had to get over I don't know if I am worth this mindset. I don't know if I'm going to be able to do this. I don't know if people will actually sell their buildings to me. All the like negative thoughts in your head. You have to start meditating, and you have to start clearing your mind and let yourself know that you got this, you can do this. And if this is what you want, you go get it. Number three on how to change your mindset. And I think I mentioned this before. Open up a book, listen to a podcast. And this is for all your listeners out there. If you're listening to this podcast, you already got one of them down. I listened to a copious amount of podcasts when I first got into large multifamily, because it was an asset class that I had never thought of. I mean, like flipping and wholesaling, all these, like not wholesaling, but flipping, you see it on HGTV. It's all over the place. It's glamorized. It's like, look what I can do. You can do it too. And look at all the money I make, and glitz and glamour and cars. You don't see an HGTV show on large apartment buildings. It's nothing like, I'm not even sure how you would glamorize it, but you know that if you open a book, if you listen to a podcast, if you find a mentor, by all means, find a mentor, join a Facebook group and talk to other people that are in the industry. Really get out there. Because the thing is that I found, especially with this asset class, is people are so open on teaching and telling other people their story and letting them know that this is something that they can do.
That is awesome advice. And it's so true, networking with people in, meetups, not, that meeting them in person, it will give you more access to them too. If you're going to these, Facebook groups, join the actual meetups. Because then you're going to meet people in person, and they're going to be willing to give you all this information that they already know, that they already learned. And that's how you start learning. And then you got to keep educating. Absolutely. I think that that is really good advice. Pili, this has been amazing. Tell me. Say something.
Oh, yes. Well, I was also going to say about mentorship. Mentors out there, especially in large multifamily space, they can be really expensive, but the higher you go, the more worth it is. And really, do your due diligence. Make sure those people that you're paying to teach you know what they're doing, number one. And number two, you have to be willing to learn. Don't pay somebody, and this has happened in the past to me, don't pay somebody your good hard-earned money if you're not going to take the time to learn. Do that when you are absolutely ready, when you're going to hand the person the check and day one start and don't stop, because it's your money. You paid for it, you use it, and you use it wisely.
Yeah, absolutely. You have to, especially if you're paying, you have to take action. Not just like, oh, I'm going to learn, and once I finish all this, I'm going to take action. No, day one, you got to start and go with it. Absolutely.
Yes.
All right, Pili, where can people find you?
Oh, so you can find me in a couple of places. Number one being my website, www.yarusiholdings.com. Or if you're looking for mentorship, you can also look us up, Jason and I, at multifamilyfoundation.com, or find me on Facebook. I'm there all the time. Instagram. I'm also on TikTok, but most of that stuff is fitness related.
Awesome, Pili. This has been amazing. Thank you so much for taking the time. I know we both had crazy schedules with the kids, and it's been an interesting recording today with all the interruptions we had with the kids. But thank you so much for making it happen.
Thank you. I'm honored to be here. And from one mama to another, you are doing amazing.
Thank you, my friend. Thank you guys for listening. Bye-bye.
This was Deal Closers with Anette Talie, brought to you by Talie Investments. We hope that you enjoyed this episode. Our goal is to provide amazing value on your real estate journey. Connect online at www.talieinvestments.com, where you can find this episode and more. Did you like this episode? Subscribe, like, and share.